Good morning, everyone, and welcome to Nadex Morning Analysis. We are going to take a look at a couple of hot spots today, and it is Fed Day, where we will be hearing from the Federal Reserve, and all eyes are ahead to hear what language they're going to be using for potentially adjusting rates in the future. I don't think they'll be doing anything today. I don't think anyone expects them to do anything today, but it's something we definitely got to keep our eye on for any language that they've got. Before we get into it, let me do a quick introduction. My name is Todd Rich. I am with Nadex. With me, my good friend Brian Caprice from Keep Trading Simple. And we do need to share this disclaimer first, that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, I think the two markets, Brian, that we were talking about that we wanted to look at, oil definitely making a move in the European session. So we want to take a look at oil. And then I think with the Fed talking and everyone curious about inflation and when they might do something about it, we'll take a look at gold. So today's going to be a commodities day.
Yeah, so let's start off with oil. Obviously, Wednesdays is crude oil reports unless there's a holiday on Monday. The last couple of readings have been really, really crazy in the fact that, March 3rd, you guys are able to see right here, or on this little area here. March 3rd, we had a forecast of minus 1.3 million. We came in at 21. So much, much higher. Last time was supposed to be a positive 3. It came in as a positive 13. Now, this time they're expecting the forecast is a positive 2.8. The API, which is another reading that not quite as on the same scale versus the EPI reading that we look at this morning, they actually said that we had a downward draw of 1 million barrels. Now, it's a different reading. It's not the same thing, but it is interesting that their original forecast was, again, 2.8 above, and then they said it was down 1. So, when you see that, a lot of times people will say, well, hey, listen, that should be a positive sign for gold. I'm sorry, for oil, and it absolutely could be. But a lot of that's going to depend on how much of, how many traders are still focusing on oil today. Looking at it in a chart, interestingly enough, and I say this every week, the move has already been happening. I don't know what it is, but European traders have really been jumping on oil now for oil inventory reports. And this is, right here, this is the 3 o'clock window, right? If you guys attended this session yesterday, we talked about session openings provide a lot of opportunity, right? Well, here's the move. From here is at 3 o'clock down, and we're talking about $1.34 to the downside from the UK open until now. And it's 8:50 in the morning Eastern time. U.S. traders are just starting to kind of come online, looking at charts and getting coffee. This is a lot of movement. A typical oil report will move anywhere from $1, I'd say $1.15 to $1.50. We've already basically had that move for the day. So question is, do we come in line? Do we come in slightly off? And what type of opportunity can we have coming from it? So, I would say, again, we know that we have this area of interest sitting here between 64.75 and 64.53. It's an area we talked about, and we bounced, and we kind of came through it here. Then we came down and it bounced again, came up, and now it was all of a sudden the top, that little Harry Potter trade that we talk about all the time. Slammed it down, came back up, kind of bounced, went up, grabbed this level this morning, came down and stabilized in it again. So, although we have an hour and a half, almost 2 hours until that release, I think there's 2 levels that we can look out for. One would be that small level in here, right? This level of basing, which I'd put right there and say, hey, listen, if we can drive up into there, that could be the kind of rollover point. The price of that one is coming in at what? 64.57 to 54.75. So nice little range there. Could be a kind of short opportunity. Likewise, again, coming to the downside, I'd mentioned before, any shorts, the target need to be down here at 63.55. We do have a level, and you can see it here. Both times it's come into that level, we've had really strong momentum out the top side. and that level kind of kicks in at 63.40 down to 63.11. I will say, and again, a little bit of a caveat, if you guys can see the red, kind of bluish and greenish, remember curve-wise, we're looking for shorts really much, much higher than in the blue area. So not necessarily the ideal situation. That 30-minute, though, was in the upper third, red area, previous level. So again, for some reason, if the next hour we're really super bullish and we can drive through that for oil inventory, that level is also coming in right here at 65.28. So again, 65.28, 65.40, 64.57 or 63.40 are the three levels that I am looking for around 10:15ish for that oil inventory report.
Excellent. I just want to pop this up on the Nadex platform. We could just kind of take a look at how someone might want to play this. First, I wanted to bring up call spreads. Let me move this out of the way here. There we go. That first level you were talking about, there is actually a call spread up in here where if you wanted to try to play it from the short side, if it were to, this is the if this then that scenario, Brian, that you talk about a bit. We don't know what oil is going to do. If oil were to pop back up into this range and you wanted to try to take a short opportunity looking for it to roll over, there is a call spread in here that could be interesting. Although if oil were to come lower and you wanted to try it from the long side, if it were to come down into this lower level, into that 63.50-ish level, call spreads would be one way to potentially play that. And then I just wanted to bring up the binary options real quickly, because often on these if this then that scenarios, and you're looking for a move based on an event, sometimes it's the binary options that might provide the best opportunity to try to grab something. And I'm just trying to find, here we go. It's got to find it on my own chart. Let's just take a look at some of these binary options. And then here you've got those levels on here as well. And there are plenty of, and if I expand the chart, there are plenty of binary options if you wanted to try to potentially play the short side if it were to pop up into this 64.60-ish range, or looking for a bounce down below if it rolled down to the 63.50-ish range down below. So binary options, call spreads could be an interesting way to play that today. All right, the other thing I think we want to talk about, it's interest rates. Let's just take a quick look at gold. I mean, today this is going to be one of those news event and how the markets interpret it days. So yep. I think that's going to be an if this then that scenario all day today, because we just don't know what's going to happen and how people are going to interpret it.
Right. I mean, the Fed's not raising interest rates today. I think it's basically 99% chance they are not touching it. The question is, when are they? And that's the language that we're going to hear today. Retail sales coming in worse than expected. And again, we say worse than expected, but we did expect it to go down. Remember that last readings was also fueled by a $600 stimulus check, which again shows you that when you send money out, it translates into retail sales. So again, next month, because checks just went out as well, we should also expect an increase in retail sales. So it was a predictable kind of piece. But now that all that money was gone, we saw a much kind of not crazy worse than expected, because there was an adjustment before, but it's not necessarily a great sign of things recovering as they should. Because again, you just can't fuel this every single month, but check. It doesn't work that way. So, a level that we talked about yesterday, or actually I guess on Tuesday, on Monday, I don't even know what day is anymore. 1735 was a level. And you can see we kind of were chopping around yesterday morning when we talked. And we said, hey, listen, it really doesn't have any clue what it's doing. And you can see we took one spike up and one spike down. Now, this is one of those things that, Nadex can say, hey, listen, you know what? This would not have affected us. And Nadex traders are absolutely correct. Had you traded this in the futures realm, you would have gotten stopped out on this trade. Because Nadex, the most you can lose is whatever you put into the trade, right, including fees. They don't necessarily have the same type of stop loss. It doesn't take you out. There's still hope that it could come back. And guess what? With that, it came all the way down and came down and tagged our 1726 profit target. Since that time, it has kind of rallied its way, very slow, kind of a really ugly grind, back up into that same exact level that we drew on Monday. And what did it do? It crashed back down again in the European session. So again, the euro, and actually the European session started kind of right here, right at this kind of stage. If you guys can see the crosshairs. So again, big push down, and now what are we seeing on a 30-minute chart? The same type of huge wicks, a lot of indecision, very, very tiny bodies. The one thing that we have right now is we at least know that 1726 is an area where buyers have stepped in. They did it here, they did it here, they did it here as well, and it's stabilizing. Question is, are these sellers up top going to be able to hold? It will be interesting to see in about 30 minutes when the U.S. trader truly comes online, although the gold traders are kind of already out there, how they're going to take FOMC today. Like I said, there's no rate change, but they're going to talk about, and thus far we've seen a very kind of dovish kind of opinion on this. We're going to wait and see. We're going to let, there's going to be periods of inflation, and we're going to let it run hot. We're going to go long. So all of these things that would technically be a fuel for inflation, we haven't seen the inflation kick in yet. They say we're going to see it sporadically, but that won't necessarily be real inflation. So that's why I think the language is going to be very, very important. So levels that I would be looking at today, trying to take it a little bit farther out. I mean, obviously the 1735, if we can rally up, that could be a level we look for. If it maintains its bearish stance today, and again, this is one of those ones from 9:30 till about 1:30, it doesn't necessarily matter what gold does as much because FOMC is going to be such a big release. And just so everybody can see, they are doing their FOMC economic projections today. So it's not just the normal statement and Fed change. And again, the Fed change will not change anything. It's the projection that's going to matter, what they're going to say, because the market's going to react. So if they say, hey, listen, we're going to let this thing run hotter than expected for a while, we could see a pop. And they can say, we just don't see any inflation, so we're good. We're going to let it go. That's also bearish for gold. So I would say levels to watch out for would be the 1722, 1735, obviously, maybe a bit up here at 1750. But the way to play it today is gold. Start looking at some of the smaller time frames around 1 o'clock this afternoon. Look at your 30 minutes, maybe even look at your 15, depending on where we are. If we're going sideways and it's just chop, it's going to be a little bit harder to play. But I would say 1735 is important. I'd also say if we start to get some really kind of negative movement here in early morning, remember we have a couple buyers sitting right here around the 1717 level, and then we got a big drop down to 1760. So we could have a push all the way back down into this level where we had additional buying. So it's kind of one of those things I would expect. And I don't know what Dan talked about yesterday, but if you guys know how to play breakout trades, I would assume there would be some type of breakout situation today. Again, ways that you can play that, depending on where price is, you could look for kind of a cheaper out of maybe a call spread, an out of the money call spread on it. You could also do it with some binaries, and again, see what the volatility rating is. See how much premium is jacked in, but you may even want to look at some type of a breakout with binaries around 2 o'clock.
All right, let's go through with, and I agree with you. We don't know what the Fed's going to say. I agree that we don't. There's no anticipation they're going to be doing anything today. It's all going to be about the language for the future. When would they start considering changing their outlook and how the market then reacts? I mean, gold has clearly been a little bit range bound this week between this, call it 1725 and 1735 levels. I mean, we could see it's just sort of channeled a bit. And there are, here, I'm actually just going to zoom in here so you can kind of see that. I mean, there's binary options you can definitely play this with. Looking for a breakout with the news, that could get kind of interesting as I zoom back in or zoom back out. I mean, you could see there are binary strikes up and down. So if gold starts to break out one way or the other, there's ways to take advantage of that. Let's just look at what we've got going on in call spreads for gold today. Let's just it'll be kind of fun. We'll look at this together.
82% of clients are net long gold right now through IG as well.
So
a very high factor.
Yeah, very right. if it starts to break down, I mean, there's a call spread that you could sell looking for, if we think it's going to break down into that 17, break down towards the 1700 level. If it starts rallying, there's a call spread up above where you could potentially try to grab something and as it takes off. So I think call spreads could be an interesting way. If you took a look at our daily call spreads, there's 4.5 hours to go on these call spreads, but today might be a breakout day for gold out of this channel, all depending upon the forecast and how the Fed starts positioning what they might do in the future and when they might do it, and how the markets digest that information for movement on inflation. With that, here, Brian, is there anything else we want to take a look at? I don't know if there's a currency you wanted to just do a quick little.
Probably not. I was going to say, I mean, like I said, a lot of this is going to be bogged down. Remember, currencies are more sensitive to interest rates than pretty much anything else out there. I will say, the Dow is continuing to push higher with the other two indices lower. The Dow will benefit the most from stimulus checks getting out and the talk of that. If they talk about not raising interest rates for longer or an extended period of time, the Dow will benefit the most from that as we start to see a slow recovery come in. So I would say that it is poised probably for a bit more of a kind of push forward. You can see in the overnight here with the Dow, there was some small areas of buying. Actually, it extends back to this level right here. So, there's been some small things. There's a little bit of a top, although I'm not necessarily as worried about it up here because it is, again, the wicks come to the exact same spot. Those are called mirror tops. They tend not to be the strongest of areas holding. So I would say the Dow actually has the chance today. It is poised where it could go higher, where I think the NQ is going to have a little bit more of an issue. As they mentioned, recovery and vaccine rollouts, all those are good things for the Dow.
Not so
great
good
for the NQ. Yeah.
Right.
Yeah,
in fact, I think that we actually might be seeing the NQ even off, while the Dow is probably flat a bit. NQ, I believe, is actually down a bit in the European session. So,
yeah.
Right, and that really is all about vaccine rollout and the economy and people, getting back on track and maybe not being cooped up at home as we have for the past year. Yep. Okay, excellent. With that, you got any questions for Nadex, please email us, customerservice@nadex.com. And Brian, also very accessible. I know he loves to catch up with folks, and if you email him, you will. You might have some questions for Brian. You can catch him at support@keeptradingsimple.com. With that, the U.S. equities are going to open here in 27 minutes. And again, it's Fed Day, and that's all you're going to be hearing if you tuned into CNBC or any of the Bloomberg. That's all everyone's going to be talking about today.
It's all you're going to hear about today. You're going to be so tired of FOMC. You're like, I don't even know what it means, but I'm tired of hearing about it.
So the Federal Reserve is going to be talking a lot, and we are going to hear about what they anticipate their policy to be looking like going forward. And the crazy thing is we're so focused in on it now, and in all likelihood, everyone's concerned about what they might do out in 2023, and and then have a knee-jerk reaction today.
Yeah, we're talking about 2 years from now, and that's yeah.
But that's how it goes.
Gotta be prepared.
Right. What the Fed says they're going to do in 2 years might have an impact
it's kind of crazy
on the market today. So stay tuned for that. With that, I want to wish everyone good luck in the markets. Brian and I will catch you again tomorrow morning.